traders, Gary Wagner here. Approximately 11:45 in Honolulu, 4:45 in New York on Tuesday, 18th day of January, 2022, and this is the Daily Report for gold and silver. After a three-day weekend, market participants began to intensely focus upon next week's Federal Reserve FOMC meeting. The net result was a hard sell-off in U.S. equities, with the Dow Jones Industrial Average taking the blunt of that, actually succumbing to the greatest drawdown this year of 1.51%, or 543 points. There was also a strong jump in the yields of Treasury bonds and notes today, and that resulted in extreme dollar strength. Currently, we have the U.S. dollar index up by 0.6%, a gain of about 0.58 points. Of course, because the precious metals are paired against the dollar, that certainly affected all four precious metals traded on the futures exchange. Oddly enough, out of the four precious metals traded on the futures exchange, only gold traded lower, and that was a direct result of dollar strength. February gold futures are currently down by 0.17%, or $3, and fixed at $1,813.50. And the easiest way to illustrate dollar strength as it pertains to gold pricing today, we've just put up spot gold, which is still currently trading down about $4.93, now $5 at $1,813 and change. I've just added the Kitco Gold Index, and what you can see is that just due to normal trading, there was a fractional gain of about $4. However, when you factor in dollar strength, which took away $9.60, then you get the cumulative effect of negative $5.60 on the day in regards to today's price of spot gold. However, the other three precious metals that trade on the futures exchange resulted in strong gains, especially in silver, gaining a little over 2.5%, a net increase of about 60 cents per ounce, taking the most active March contract to $23.51.5. Coming in second in terms of the increase was a 1.5% increase in platinum, $979.30, and then palladium up about 0.8%, a net gain of $15.80, with an ounce of palladium now priced at $1,894. We are looking at a daily candlestick chart of February gold futures. What we can easily see is that we have had a decline for the last three consecutive trading days. We have not had a series of lower lows, but today's low is far below the lows we saw either Friday or Thursday. However, it was today's low that I believe gives us the most important piece of technical information. The low that came in was 1804.70. If we look at the 61.8% fib retracement, of course, that is a shorter data set from the lows of November the 3rd to the highs of November the 16th, added to the two moving averages that I have just put on the screen. 200-day moving average, that is in blue, and the 50-day moving average, that is in green. We can see a band where we have, I believe, strong support in between, call it 1800 and approximately 1805. And that does pertain to our current trade. Of course, we are long below this, I believe at 1787. And within the next week, we are going to have to exit that trade by either rolling over into the next front month, which will be April, or taking profits if we believe that we can sell them at a higher price and that the market will come down, and then we buy a dip, more effectively capturing profits. And that is something that we are going to be weighing over the next 3 days. When we look at volume within the most current February and compare that to the April today came in at only 25,000 as opposed to what we witnessed in the February, which was roughly 4 times that level. So there isn't much volume yet in the next front-running month. What our anticipated strategy is, we definitely see resistance that comes in 1820 up to about 1830, and that's based upon these two highs. If we can sell between these two prices, 1820 to 1830, and then hope for a dip as the FOMC meeting gets closer, effectively we would roll over, but we would leg out of that position. And what that means is we would first cover our long-in profits, look for the market to trade lower, and then go ahead and roll that over into the April position. Of course, we will send out a trade alert as we get closer to first notice day and act accordingly depending on how the market trades over the next couple of days. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.